Okay, good evening, everybody, and good evening, Gerald. How are you doing?
Hi, Benny. I'm very good. Yourself?
Okay, great, thank you. Guys, if you can hear us, can you just type a yes on the comment so that we know that you can hear us clearly before I introduce Gerald to this tonight's session. Okay, thank you. First of all, I want to thank you, Gerald, for joining us in our show tonight. As we all know that the EV or electric vehicle sector, we always heard about Tesla, but China has been one of the front runners, and they're growing quite fast, and quite a lot of companies are actually going into the EV space as well. And therefore, we have Gerald here, who is quite well versed in the EV sector, to actually share with us what's happening in the Chinese EV sector and how we can also play a part, or how we can invest in this particular segment. Right. So Gerald is the CEO and founder of Beansprout. It's Singapore's fastest growing investment advisory platform, helping individuals to make better investment decisions. He has more than 13 years of experience in investment advisory, and was previously also the head of securities, or Singapore Securities Research at Credit Suisse. Gerald was ranked top analyst, right, in 2016 to 2020 in institutional investor, and as he has been on the media as well, right? So his credentials are quite there, and of course he also holds a Bachelor of Science in Economics from the London School of Economics, and also a CFA charter. All right, so basically Gerald is going to share with us. He has a presentation, and if you guys have any questions at all, you can type those questions in. I'll moderate those questions, and I'll put those questions up for Gerald to answer. All right, so Gerald, welcome, and over to you.
Okay, thanks so much, Benny, for the very kind introduction. So, good evening, everyone. Thanks so much for joining tonight's session. What we'll be discussing will be opportunities in the Chinese electric vehicle sector. So over the next 1 hour or so, I will start by giving a bit of introduction about recent developments in the EV sector. We will then go on to talk about specific ways that we can think about investing in the Chinese EV sector. But if you have any questions, feel free to actually share them, and we will have time for Q&A session at the end of tonight's presentation. Okay, so let me just try to pull up my slides. Okay, thanks so much for that. So Benny has given the introduction earlier, so I will not be sharing this further. But if you are interested to find out more about Beansprout, feel free to visit our website. If you find today's session useful, there'll be additional materials that are on the website as well. And do follow us on our social media, whether it's a Telegram, Facebook, or Instagram. So a bit of disclaimer to start with. Today's session is for education purposes only. It should not be taken to be financial advice. So hopefully we can all learn a bit more about the Chinese EV sector through tonight's session. Okay, so what will we go through tonight? Okay, to make your time worthwhile, we will discuss what happened in the first half of this year. Just a bit of a recap before we go into finding out what is the prospect of the Chinese EV sector in the second half of this year. Thereafter, we'll look at some of the structural growth drivers. So taking a bit longer term, not just what happened in the first half, what just happened in the second half, but what could potentially happen 5 to 10 years down the road. Okay, to make sure that it is a balanced sharing, we'll be talking about some of the key risks as well, such that we can think about both the upside as well as the downside. Last but not least, we will discuss how you can potentially think about getting exposure into the EV sector. Okay, our first topic would be what happened in the first half of this year. Okay, so if you have not been following the EV sector, you've been busy working, you've been looking at other investment, what we'll do is to just give you a quick recap so that we can start this discussion around how we think about the prospects for the sector as a whole. Okay, so if you were to look at the share price of the Chinese EV stocks, they have actually been quite weak for the first half of this year. If you look at some of the key names like NIO and Xpeng, then probably you have seen declines, part of it driven by the whole correction in the tech sector that we saw, part of it because of the weakness in Chinese stocks. But there are specific headwinds relating to the electric vehicle sector as well. So what are some of these challenges that the EV sector actually face? Okay, the first one is that the deliveries have slowed down. Okay, so when we think about the electric vehicle sector, generally we expect that there will be very strong growth. They will be able to sell more vehicles on a year-on-year basis as the demand continues to grow. But what we saw in the first half of this year is that they were not able to deliver as many vehicles compared to what the market was expecting. Okay, so if I look at, say, NIO, which is one of the larger Chinese EV manufacturers, what they actually delivered in the second quarter of this year actually came down from the first quarter of this year. Okay, so this is not something that an investor in the EV sector would usually expect because of the very strong demand trends, because of the structural growth. You would expect that this will be constantly delivering growth, which was actually not the case in the first half of this year. Okay, so what actually happened? Naturally, you'll be wondering, is it because demand is weak? Is it because there were supply chain issues? So one of the key reasons is that if you look at China, there was this very strict measures implemented to be controlling the COVID pandemic. So as a result, the production of the vehicles were affected. So if I were to look at NIO as an example, once again, what they shared is that the supply chain disruption, not demand, was actually the largest problem. Okay, so what we saw is that because there were lockdowns in selected cities, the supply chain got disrupted because there was a shortage of some materials, such as your semiconductor, which is why they were not able to deliver as many vehicles as what the market was expecting. Okay, but this is not something that is specific to the Chinese EV makers, because if you look at a company that we are very familiar with, which is Tesla, it was impacted by the production constraints as well, such that the production of Tesla was not as strong as what the market was expecting at the start of this year. So I think the way to think about this is that it is an industry-wide problem. Some companies probably face more of a challenge because they were not as good in managing the supply chain. They were located in specific cities that were more significantly impacted by the COVID lockdowns. But in terms of the supply chain impact, it was felt across the board. Okay, so what happened when the deliveries actually came down? What we saw is that the earnings of the Chinese EV makers was also not as strong as expected. So as investor into companies, we are naturally looking at the profitability, the cash flow, the balance sheet of these companies. But what disappointed investors is that if I were to look at the margins, once again using NIO as an example, the margin that they were able to earn in the second quarter was lower than the first quarter, and it was lower than the fourth quarter of last year as well. Okay, so the decline is actually quite significant. The other major Chinese EV companies didn't see such a significant decline, but between the first quarter and the second quarter of this year, we likewise saw the decline in margin because of some of the supply chain issues that we discussed. Okay, so this is another factor that led to the share price weakness because the margins were weaker than expected. So we have discussed some of the reasons for the weakness in the first half of this year. As investors, we should be forward-looking. What is already happened in the first half of this year, I think it's good that we understand them. But then the question is, okay, we are now in September. Are we still facing the same production issues, or are things becoming better? Okay, so the good news here is that the supply chain constraints are easing. If we were to look at, say, the semiconductor sector, okay, what some of the car makers have shared is that the chip crisis is actually easing. Part of it is demand driven because of the fact that we have seen some slowdown in global growth. I think if you were to look at the market over the past few days, a lot of the concern is about whether we are entering a recession. So definitely we are seeing slower growth globally at this point in time. That has actually helped to ease some of these supply chain constraints, especially those relating to the shortage of chips that we saw earlier this year. On the other hand, if we look at the demand side, okay, what is encouraging is that the government incentives have continued to keep the demand for electric vehicles strong. Okay, so this is a picture taken in one of the one of the showrooms for NIO. They have a new launch that is coming up, which is why I think there has been quite significant interest amongst consumers to actually check out this new launch that is coming up. So the Chinese government has actually announced various measures to keep the EV demand strong. This is despite the fact that your overall consumer demand has weakened across the board in China. But because there are still various government subsidies that come in, your demand for EVs is actually still fairly healthy. So one example of incentive that is given by the government is that there's an exemption in the vehicle purchase tax until the end of this year. So some consumers might be just making use of this exemption to be making their EV purchase today. Okay, so you have got the demand being supported by some of these incentives, but from a individual company level, what is also encouraging is that they have new model launches. So whenever there are new model launches, it generally gets people excited because there is something new to try out. Some of the previous models might not have been meeting their demands. And then when these new models are launched, it usually drives a wave of new orders towards the electric vehicles. So it's something that the market constantly looks out closely for. The big launch that everyone is looking out for is NIO and their mid-size sedan, the ET5, which is expected to come into the market at the end of this month. So when we look at what the management shared during their second quarter results briefing, they were actually very confident about the ET5 because of some of the ordering activity that has already come through. So what they expect is that the number of units of ET5 sold can potentially be more than 10,000 units in 1 month. So that is very significant because if we recall and think back about what NIO sold in the whole of the second quarter, it amounted to just about 20,000. So with one new model being able to sell 10,000 units, that is actually quite a significant uplift. Okay, but NIO is not the only car company that is coming out with launches. You've got other companies as well. And NIO has actually got more than one new launch that is coming up. Okay, so apart from the ET5 that we mentioned, NIO also has this ES7, which is a mid to large size 5-seater SUV. And then if you look at other Chinese EV companies such as Li Auto, they also have this full-size flagship SUV, the L9, that will be launched in the coming months. Okay, so I think that is what is making consumers sit up and take notice because of some of these new launches coming into the market. And likewise, investors are looking out very closely as to how these new launches will actually perform. Okay, so what does this mean for the deliveries expected in the third quarter of this year? Previously, we looked at some of the charts. We saw that the deliveries came down in the second quarter. But if we were to look ahead, is it going to be better? Okay, that is what we are concerned about as investors. So if you were to look at NIO, the number of vehicles expected to be delivered is expected to be more than 30,000 and improving from the levels that we saw in the first quarter and in the second quarter of this year. This is based on the management projections. So if you go to their investor relations website, if you look at their presentation, this is a number that the company has shared. It is not our forecast. It is not other analysts' forecasts. It is just based on the company's internal projections. So quite positive here in that they are expecting the deliveries to actually improve this quarter compared to the previous quarter. If you were to look at some of the other EV companies such as Xpeng and Li Auto, then the trend isn't as clear. Part of it is because they were still impacted by some of the constraints that we discussed earlier. So, for example, some of the COVID-related lockdowns, I think in July, we still saw some of that in some Chinese cities. And more importantly, because they don't have that many new launches, so that is not in a way helping to drive very significant demand growth. Okay, so one positive sign is that for companies with the new launches, we are starting to see that they are more confident about the expected deliveries as the supply chain constraints start to ease. We talked about margins earlier, so I guess the next question is, okay, if the deliveries start to pick up, will the margins start to improve as well? So we see this very clear trend of NIO's margin coming down over the last 2 quarters. But once again, if you look at what management has shared in the most recent results briefing, then the company's expectation is that the vehicle margin will improve slightly in the third quarter of this year. Part of it is again because of the new model launches. So the ES7 that we shared earlier, that is a SUV that has a higher price tag to it. So as that starts to be delivered in the third quarter, management believes that that will help to improve the margins that they are able to earn. So once again, that comes through from the management. It's not a forecast. It is not the market expectations. And that is still dependent on whether they are able to execute and deliver as expected. Okay, so with that, we have talked about some of the drivers in the first half of the year, what to look out for in the second half of this year. So we'll have a bit of a quiz at this midpoint. The question is, which EV maker is expected to deliver the most EVs in the third quarter of this year? This is just based on the 3 that we looked at just now, NIO, Xpeng, and Li Auto. Which one is expected to deliver the most EVs based on the management expectations? So if you recall, there's A, NIO, put A, B, Xpeng put B, and C, Li Auto put C. Any guesses from the participants? Okay, otherwise, if you have your answer in your head, I will share the answer. So, NIO expected to deliver the most EVs amongst these three companies in the third quarter. Thanks so much, Frederick, for your answer. You are correct. It is NIO. Part of the reason is because they have got the incremental deliveries expected in the next few months because of some of the new launches, the ET5, as well as the ES7 SUV. Okay, so we have talked about what has happened in the first half of this year, what to expect in the third quarter. Next, what we'll discuss is the longer term growth trends, okay? Because when we think about electric vehicles, it is not something that is just one quarter growth, but we are thinking about the adoption of this new technology over the next 5 years, over the next 10 years, as we become more conscious about the impact towards our environment. Okay, so the positive thing here is that the growth in the EV sector continues to be very strong. If you look at, say, what happened over the last few years, in 2019, we saw that there were 2.2 million EVs being sold globally. That rose to about 3 million in 2020. So remember, 2020 was when the COVID pandemic actually affected us globally. That definitely disrupted a lot of our usual practices, our demand trends. But even then, we saw that the number of EVs sold globally actually rose to 3 million. Okay, in 2021, when some of this consumer demand was actually unleashed because some of the lockdowns were actually reversed, some of the travel actually started coming back, you saw that the number of EVs being sold increased very significantly to 6.6 million in 2021. So the numbers are actually quite impressive. Within 2 years, from 2.2 million in 2019, it rose to 6.6 million by 2021. Okay, so you don't see this type of growth numbers in many industries. And the EV sector is one of them where you are seeing this exponential growth in terms of the total sales globally. The other interesting trend to pick up from this chart is that China is a very big part of the overall EV market. So if I were to look at the number of EVs sold in China, that represents close to half of the total EVs sold globally. Okay. So the reason why we spend so much time talking about the Chinese EV sector is not because we want to be spending more time on it, but because of the fact that it is the largest EV market globally. It controls a very significant part of the global EV supply chain. So if you actually want to think about the EV sector, first and foremost, we actually need to understand what the EV sector is like in China. After China, the next biggest market is actually Europe, because they have a lot of incentives towards the adoption of some of this clean energy technology. So we have seen the adoption of EVs being fairly high in Europe as well. If you were to look at United States, okay, it is definitely not as big a market for EVs compared to China and Europe. Part of it is because the infrastructure is not so developed. There are less incentives to be provided to consumers. So the adoption rate of EVs has not really picked up as significantly compared to China and Europe. Okay, so now we have a broad understanding about like which are the key markets for EV. We go down deeper to look at the Chinese EV sector. So if I was to look at the first half of this year, the total number of EVs sold in China was 2.4 million. So I mentioned earlier that, okay, the growth has actually started to come down a bit compared to the previous quarter, especially compared to fourth quarter of last year. But if I were to look at it from a year-on-year perspective, so comparing, say, first quarter 2021 versus first quarter 2022, or comparing, say, first half of last year versus the first half of last year, we are still seeing very strong growth on a year-on-year basis. Okay, so while the deliveries has slowed compared to fourth quarter because of some of the supply chain issues, when we take a step back and look at whether it is still growing compared to the previous year, actually the growth rate is still fairly decent. If you were to look at the adoption rate of EVs, 26% of new cars sold in China in the first half of this year were actually electric vehicles. Okay, so that is actually a very high number. Think about it, if there are 4 cars being sold in China over the first 6 months of this year, actually 1 out of 4 would be an electric vehicle. Very few other countries have such a high adoption rate. If I were to look at, say, Europe, probably the adoption rate would be just slightly above 10%. If I were to look at the US, the adoption rate would be below 10%. So to get to 26%, that really reflects how strongly EVs is actually growing in terms of demand within the Chinese market. Okay, so this is the chart that shows you the adoption rate. So what we see here is that, okay, if I were to look at, say, 2018, for every 10 cars sold in China, less than 1 of it would actually be EV, because the penetration rate is actually below 10%. We saw a very strong pickup towards the second half of 2021, such that by the first half of this year, it actually went up to above 20%. Okay, so this increase in EV penetration rate is actually what makes the Chinese market so unique and why there's so much excitement about the Chinese EV sector. Apart from looking at the domestic Chinese market, the other interesting development is that a lot of the Chinese EV makers are also expanding into global markets. So using NIO once again as an example, they entered Norway in 2021, and they are expanding into other countries such as Germany, Denmark, Sweden, and the Netherlands. So not only are they looking at competing effectively in the Chinese market, but then as the global demand starts to improve, they are looking to be able to tap some of these opportunities globally as well. Okay, so another quiz. Which of the following have the most EV sales in 2021? A, USA, B, Europe, and C, China. Okay, so please share your answers so that we know that whatever I've shared so far, you are able to follow, and then we can have a more fruitful discussion later during the Q&A session. Okay, so I've seen answers coming in. Thanks, Vicky. Thanks, Richard. The answer is C, China. So China has the most EV sales globally in 2021. Close to every 1 in 2 electric vehicles sold globally last year actually went to China. And I guess that is really why we spend so much time discussing about the Chinese EV sector today. Okay, so I presented some of the upside drivers, but I guess in investing, it is always worthwhile thinking about what are some of the risks. Okay, so one of the key things that investors are still worried about today is raw material costs. Okay, so if you think about EVs and the whole supply chain, the battery is a very important component towards the entire EV. Some estimates have actually put the cost of a battery at about 30% of the total cost of making an electric vehicle. Okay, so it is a very important component. And what is one of the key components that go into the battery is actually this material called lithium carbonate. Okay, so this is actually a chart that shows the price of lithium carbonate. What we have seen is that in the previous few years, the price of lithium carbonate has come down. So that has helped to bring the cost of battery down. That has helped to bring the cost of EVs down. But the big change from last year is that the cost of lithium carbonate actually spiked up very significantly. Okay, so we did see this increase in price across a number of different commodities, but maybe not to a similar extent. So if I was to look at, say, oil prices, probably higher compared to where it was 2 years ago, but then you probably don't see such a significant increase where it has gone up from below 100,000 yuan per ton to close to 500,000 yuan per ton. The other interesting observation from this chart is that if you were to look at a lot of different commodities, say oil, there has been some correction in the last few months because of concern of slowing global demand. But when we look at the price of lithium carbonate today, it's actually still at a very elevated level. Okay, so when we last checked, it has not come down by much. So that is something that we are looking at very closely for to see whether that comes down together with other commodity prices, like what we have seen over the past few weeks. Okay, the other key thing to look out for would be Chinese government subsidies. So part of the driver towards the adoption of EVs is because of the very attractive subsidies that the government has provided. That was something that we shared earlier. But we don't know whether this will be cut further in 2023. So the government has already removed some of these subsidies for EVs earlier this year. But then they have not shared whether this will be cut further in 2023. If they do, that could present some headwind because you are not given as generous incentives compared to the past. So once again, this is something that we are looking out closely for over the next few months and especially towards the end of the year to see whether that is something that will be extended or we might actually start to see some cutback. Okay, so we have talked about what happened in the first half, what to expect in the second half, what are some of the long-term trends, and what are some of the risks to look out for. So in terms of how to get exposure to the EV sector, there are a few ways that we can think about it. So one of the names that a lot of investors actually look at would be NIO. It is a Chinese producer of premium EVs. And we shared some of the recent trends around NIO throughout this entire presentation. They now have a secondary listing on the Singapore Exchange, even as their primary listing remains in the US on the New York Stock Exchange. One thing to keep a lookout for NIO is that in terms of how the company differentiates itself, it is largely through technology, and what they have would be a battery swapping technology as well as the autonomous driving technology. We'll share a bit more about what this battery swapping technology is, but to be able to understand NIO, really the idea is that the technology would be a big differentiator. The company intends to be able to break even sometime in 2025. So that is something that they have stated publicly. And that is really driven by the fact that they expect deliveries to pick up. And as the deliveries pick up, they expect to achieve economies of scale, improve on their margins, and eventually achieve break even. We shared a bit about different companies wanting to expand into the global EV market. So NIO expects to launch into 25 countries and regions worldwide. So that is something that the company is looking at as an opportunity to be able to grow their overall EV sales. Okay, so we shared some of the new launches for NIO earlier, but to understand how the company came about, we can think about the existing models that they have. So we can look at the ES8 model selling about 11,000 units in 2018. Then you have the ES6 mid to large size SUV coming in 2019. And with that, they were able to double their sales between 2018 to 2019 to reach about 20,000. Okay, then they brought in the EC6 model in 2020, and with the growing sales for the two previous models, once again doubling the total number of EVs being sold, and then doubling once again in 2021, such that it reached about 90,000 units last year. So once again, very few companies where you see this kind of growth trajectory where they're able to grow the total number of EVs sold on a year-on-year basis. Okay, we talked a bit about the technology differentiator, and the question that you might have is, what is this battery swapping technology that NIO actually has? Okay, so for EVs, the infrastructure is very important. Whether the user is able to charge the battery, whether it's convenient to do so, whether he or she has to wait for uh, half a day, 30 minutes to be able to get the battery charge. I think those are important factors to consider as to whether the consumers will be buying an electric vehicle versus other kinds of vehicles. Okay, so what NIO actually tried to do with this battery swapping technology is that you can be driving your EV into one of these charging stations, and what they're able to do is to replace your empty battery with a fully charged power pack within minutes. Okay, so you don't have to be waiting there for 30 minutes while your EV is being charged. There's already a ready charged battery that you can replace within a few minutes and then be back on the road once again. Okay, so that is something that they have actually tried to introduce into the market. And what investors are looking out closely for is whether there's something that can be adopted on a much larger scale. Okay, next question that you might have. Many of you might be familiar with Tesla. So the question is, how do Chinese EV stocks compare to Tesla? Okay, so if you were to look at the deliveries, then definitely Tesla is way larger compared to some of these EV companies that we discussed. In terms of the deliveries, we saw that the total number of deliveries by Tesla exceeded more than 200,000 in the first half of this year. Compared to the Chinese EV companies, that would be slightly smaller in terms of the deliveries. Okay, so despite the kind of deliveries that we saw for Tesla versus the Chinese EV makers, when we look at the margins that they are able to make, Tesla is still ahead of some of the Chinese EV makers, because the idea is that when you are producing this EV on a much larger scale, you have economies of scale, and that helps to be able to lower some of your fixed costs and help you to improve on the margin. So Tesla has the highest margin, but even within the Chinese EV companies, there's a range of margins that they made in the second quarter of this year, such that if I'm looking at something like a NIO and Xpeng between 10 to 15%, but then for Li Auto, probably closer to Tesla compared to the other Chinese EV makers. Okay, so then the last question is on valuation. What is the valuation multiple that these different stocks actually trade at? With the better profitability that we have seen for Tesla, the price to sales multiple of Tesla is also higher compared to the Chinese EV makers that would be trading at a low to mid single digit kind of multiple on a price to sales perspective. Okay. So hopefully that gives you some context if you're already familiar with Tesla. How do the Chinese EV companies actually stack up against Tesla from a deliveries, from a margins, and from a valuation perspective? Okay, so if you are thinking that, oh, it is actually a lot of work to have to analyze the new launches for individual EV makers, what kind of margins that they are making, whether I need to be aware of a certain EV maker being based in, say, Shanghai versus other Chinese cities, and how they'll be impacted by the lockdown. But what if you are looking for something that allows you to be able to get exposed to the entire Chinese EV sector in a very diversified manner, whether there's an ETF for that, then one potential ETF that is also on the Singapore market is the Nicole AM Straits Trading MSCI China Evfm ETF, a very long name, but let me maybe share a bit more about this ETF. It is the first SGX listed ETF to offer investors access to Chinese EV companies. But it is more than just EVs, because we are looking at some other technology, including energy storage, autonomous vehicles, shared mobility, and other new transportation methods. The ETFs that we understand would usually track an underlying index, and the index that this ETF actually tracks is the MSCI China All Shares IMI Future Mobility Top 50 Index. If you're wondering what are some of the underlying components of this ETF, it would be NIO, Geely Auto, BYD, Xpeng. So some of the familiar names that you might actually know of, but not entirely sure how you can actually invest in them. Then the ETF actually provides you with diversified exposure towards some of these names. Okay, I guess your next question is why Evfm? Okay, what does the future mobility actually stand for? So the idea behind this ETF is that it's not just limited to electric vehicles. Yes, we have companies that are EV makers in the ETF, but apart from that, there are also companies that are involved in hardware and components. There are also companies that are involved in the autonomous driving software. There are also companies that are involved in infrastructure, including, say, the charging points. So effectively, you get this diversified exposure without having to think about whether the battery makers will benefit because your lithium cost is high, or whether the EV makers might suffer some loss in profitability because of the higher raw material prices. So the idea is that across the value chain, there'll be companies that will be in this ETF, such that the exposure is broad-based, and effectively what we are looking at is the long-term structural trend in the Chinese EV sector. Okay, so I've shared a lot about the EV sector over the last 40 minutes. If you're looking at additional resources, they'll be available on our site. Or if you have got any other questions, want to join our discussion, feel free to join our Telegram group as well. So with that, we'll open up for Q&A.
Well, thank you so much, Gerald, for your very elaborate and systematic presentation. I think I've learned quite a lot as well today on the Chinese EV sector. Well, everyone, the floor now is open to questions. So if you have any questions for Gerald, you can type it down. We have about 20 minutes or so for Gerald to answer the questions. All right, so if any questions, you can type it down. Maybe I can start the ball rolling first by asking some questions. Uh, I, I know that China is a very big market for the electric vehicle space, and Tesla is still dominating the market, right? And of course, Tesla has a first mover advantage. Everybody talk about EV, they always talk about Tesla, but you can see Chinese names, company names are starting to pop up right now. But moving forward, do you see this? Any of the Chinese companies, including NIO, would be on par with the technology, the infrastructure that Tesla already have?
Okay, if you look at where Tesla is today, where the Chinese EV companies are today, probably the gap is still fairly significant. I think one number that we can compare, even if we don't look at it from a qualitative perspective, is just in terms of their production capacity. So that was why I had that chart earlier that showed like how many EVs Tesla delivered in the first half of this year. How does that actually compare to the Chinese EV companies? And we see that the difference is actually quite significant. So just from a scale perspective, Tesla is significantly ahead, and that has also enabled the company to achieve better profitability compared to the Chinese EV makers. If you look at the technology, I think across the entire EV manufacturing process, Tesla is probably slightly ahead as well. So I think that is why a lot of the interest towards electric vehicles has been centered around Tesla. But I think that is also why we shared some of the recent developments around the Chinese EVs, and also what are some of the key things to look out for, because those are things that investors are watching out very closely for to see how quickly they are able to catch up. So I'll use two examples. One is, say, from a technology side. Okay, I mentioned that one of the key differentiator for NIO is their battery swapping technology. We don't actually see that being introduced by Tesla. They are still using the batteries that might be produced by maybe BYD or other suppliers. So that is why it's an interesting development, because if there's something that NIO is able to implement on a large scale, it is something that proves to be feasible. Consumers actually like it a lot. they're able to get different partners on board, say some of the petrol stations, to be able to also offer this EV charging facility, then that could potentially help them to accelerate on the adoption, because in terms of the key infrastructure, which is around the charging, they have actually made significant advances to it based on the battery charging technology. Okay, so that's why we spend some time talking about the technology aspect of new. The other area, which we also briefly mentioned, is the expansion of the Chinese EV companies into the global market. So I guess if you are looking at the domestic Chinese market, you might say that, some of these Chinese EV makers might have an unfair advantage because of the fact that they might know the local market much better than some of the global EV makers. They might be able to get access to lower cost inputs compared to other EV makers. So how competitive are they in the global market? So that is why investors are looking out closely for the adoption rate of some of these Chinese EV makers when they go into the global market. Because, for example, if I'm looking at NIO entering the Norwegian market, effectively they're competing with Tesla, they're competing with some of the automotive OEMs in the market. Then that is where we can really see how competitive they are from a pricing perspective, how consumers actually react to their product. Do they actually like what they are able to see and drive around? I think that is why we look out very closely for the global adoption numbers as a further validation as to how competitive the Chinese EV makers are outside of the Chinese market.
All right. Thank you, Gerald. Well, we're still waiting for questions, guys. You still have an opportunity to ask Gerald questions while still here. In the meantime, I have another question here, Gerald. We see, I mean, we haven't really seen all the traditional car makers, like the incumbents like Toyota, General Motors, and the rest of the other players coming to the market. I mean, in a big way in the electric vehicle market. So you have mentioned risks earlier, but I didn't see that you didn't put any of these current car makers or now starting to go into the EV space as well. Do you think they will pose also a challenge or threat to the Chinese EV players?
Okay, so yes, thanks for pointing out. So that is definitely a key risk to look out for in terms of the changing global competitive landscape. The reason why I did not bring it up as a risk earlier is because I focus on some of the factors that investors are looking at more closely at, given some of the recent developments in the market. So, say the battery cost, that is something that is very relevant today because we are in a very inflationary environment. So everybody's talking about prices going up. It's not just for batteries; it is for many different products. So this higher prices is a question that we constantly get asked in terms of how will that affect the pricing of EVs and how will that actually affect the margins that the EV makers are able to make. So that was why we mentioned the risk around the higher battery costs, and I guess for incentives because we also mentioned earlier that some of the demand drivers is driven by very generous government incentives. So just to balance it off a bit, I thought it's probably worthwhile to note that these incentives are not going to be there forever. There's always a risk that some of these incentives can be scaled back, like what we already saw earlier this year. So we just need to be having that at the back of our minds, especially as we approach the end of the year. We have yet to actually find out whether these incentives will be extended for another year. But back to your question around competition, yes, that is a very good point to mention, because quite clearly we have seen a lot of the OEMs wanting to enter the EV space as well. Based on the very strong growth trends that we saw from the chart earlier, it is quite evident that the demand for EVs is growing very strongly. And I think if the traditional automakers don't want to be left out of the game, they probably have started thinking about how they can benefit from some of these demand trends as well. So in the US, as an example, General Motors, I think they have quite ambitious targets towards having EVs as a percentage of their portfolio in 5 years' time, in 10 years' time. So that is definitely something that they are all wanting to get into. In terms of how they actually approach this, I think different companies have got different approaches. Some take a more ambitious approach where they are willing to build their own EV manufacturing facility. Some of them have invested into battery facilities as well. Some of it do it through like a joint venture basis. So different companies have got different approaches. It is something that we are watching out closely for as well to see whether they might actually pose a competitive threat to some of the newer EV companies. But at least based on what we see in the market, because the demand is still growing very strongly, it is probably growing fast enough to be able to accommodate different EV players. But at least what we saw over the past 6 months, over the past 12 months, the greater constraint has actually been more on the production and the supply side rather than on the demand side or from competition actually accelerating.
Hopefully the competition comes in, the EV prices can actually come down. But you already point out that earlier that battery prices is still the main one of the major costs in EV making.
Yep.
So I mean, with the rising demand like this, and you see more and more companies producing more vehicles, do you foresee that the prices or lithium carbonate, I think carbonate
Yes.
would eventually come down a little bit, because from looking at the price, it's like gone up nearly 5 times, right, over the past
Yep.
2 years. So do you think that the price would come down, or you think the price would remain elevated, in your opinion?
So if you ask Elon Musk, he's definitely hoping that the price of lithium will come down. So there's an interesting comment that he made in the previous earnings call, in that he actually encourages many people to go into lithium mining, because he thinks that that's the best way that someone will be able to make a fortune, given that the demand for lithium will probably stay elevated for an extended period of time. Okay, so those words actually came from Elon Musk, in that, like, if he has advice to give anyone starting a business today, it is not to go into fintech, but actually to be going into lithium mining, because he actually sees that as a significant opportunity. But of course, he wants more people to be coming into lithium mining, because that will increase the global supply of lithium, and that can potentially help to bring down the cost of battery, and then likewise the cost of the electric vehicle. But as we see for some of these commodities, um, if it is not something that is demand driven, if the adjustment has to come through from supply, it is not something that can be reflected in the price immediately, because it takes time for people to actually raise the capital, to want to start mining, to be able to get the production out. So it is not a process where we immediately see new supply coming in within few days, few weeks, or even few months. And I think given that the demand for EV still remains strong, like what we saw in the earlier charts, and with no supply coming into the market, that is really why the price of lithium carbonate has remained fairly elevated. So back to your question about whether it will stay high, whether it will start to come down, I think effectively it's still driven by demand and supply forces. Demand, we can see very clearly that the demand for EVs is not actually slowing down. In fact, there might be some pent-up demand because of all of these production constraints in the first half of this year. But what is more important is whether we see significant lithium supply coming into the market. And that is something that even Elon Musk is encouraging more people to come on board, because that is definitely a key bottleneck.
Right. Currently, which are the countries that produce the most lithium, Gerald?
Okay, so lithium is not a readily available commodity, but once again, the constraint is not just on lithium mining, but also in terms of lithium processing. Okay, so once again, going back to the China as being very central to this whole Chinese EV supply chain, a lot of the lithium can be mined outside of China, but China is very important for lithium processing. Okay, so after you take it out from the ground, you can't actually use it for your battery immediately. It needs to be processed in a certain way. And what caused the bottleneck, especially when China was having all these lockdowns earlier, was that there were concerns about whether this lithium can continue to be processed. And that was actually one of the key bottlenecks. So if I remember correctly, in terms of the global lithium being processed in China, that represents more than 50%. So that is going back to this discussion around why China is so important in the global EV supply chain. You've got quite a number of large EV makers there. Uh, 6 out of the 10 largest battery makers are in China. For lithium processing, they control more than 50% of it. And for every 2 EVs that are sold globally, one actually goes to China. So I think it goes back to the discussion around why we focus so much on China, because for every part of the supply chain, you can't actually think about the EV sector without understanding how things are actually developing in the market.
All right, thank you. Thank you so much, Gerald. We have a question from the audience. We have a question from Sui Kiang, who asks how likely Chinese government will abolish the 30% incentive on EVs. And if does happen, how many percent do you think there will be expected drop in its sales?
Okay, so this is a multi-million question, especially when it comes to Chinese government policy. It is something that no one has ever been able to forecast accurately. And it's not just relating to EV incentives, it's effectively every policy that we are thinking about what the Chinese government could do next. Whether is it in terms of helping some of the property companies, whether they're going to lift the zero COVID policy. I think that is one area that most analysts find difficult to forecast. Okay, so in terms of whether they will abolish the 30% incentives on EVs, I would say it is really hard to tell. On one hand, you've got the fact that they are moving the incentive system towards one that is based more on getting the automakers to produce more EVs compared to the ICE vehicles. So focusing more on the automakers part rather than on the consumer part, in terms of how these incentives are being given out. Okay, so it is not directly giving the consumer subsidies, but then just putting pressure on the automakers to be producing more EVs. The second part of this equation is that the demand for general consumer goods at this point in time in China is fairly weak. If you look at, say, the consumer sentiment index, that is actually fairly worrying because of the fact that for a lot of the consumers, they may not know whether there might be a lockdown coming soon. So as a result, they're just not spending on some of the things that they might usually be spending on. So what we have seen in the past few months is that to be able to encourage spending, the government has actually rolled out different consumer incentives. So that was some of the tax incentives that we discussed earlier to actually get the consumer to continue spending despite the very uncertain macro environment that we are looking at. So you've got two opposing forces here. On one hand, they're starting to remove some of these incentives for EVs, especially those that are provided directly to the consumer. But then on the other hand, given the recent developments in the last few months, they are still trying to encourage consumer spending as a whole. So I think that is something that we will look out for. That's why we highlight it as a risk. But in terms of whether we are definitely see this incentive being removed, I would say it is really a balance of these two opposing forces. If this happened, how many percent expected to drop in sales? Again, what we have seen in the past is that the incentive has already been brought down this year. So we mentioned that in 2022, the incentives has already been brought down to 30%. Okay. But still, we managed to see the increase in EV sales on a year-on-year basis because there's this structural trend towards EV adoption. And likewise, when we look at the penetration rate comparing 2021 versus 2022, recall that last year, the penetration rate was below 20%. First half of this year, it actually went up to above 20%. So while some of these incentives are being scaled back, we have still generally seen a continued strong adoption in electric vehicles. It's just that maybe the growth won't be as strong as if these incentives continue to be provided to the consumer.
All right, thank you. Hope that answers your questions, Vikyang. If you guys have any more questions, you can type it down right now because we are coming to the end of today's webinar. Just out of curiosity, Gerald, I knew has just been listed on SGX, right? Is the vehicle already been sold in Singapore?
Okay, so this is a very interesting question. So when they had the listing ceremony, they actually brought down a number of the new EV models, and if you go outside SGX Center, you'll be able to see some of these new vehicles. I think one of the vehicle that everyone is very excited about is actually their sports car model. So actually, a lot of people were taking photos with the EV outside SGX Center. But I think because NIO focuses more on the premium EV sector, so if I were to look at the key EV model that is still being sold in Singapore today amongst the Chinese EV makers, then BYD is a model that has actually been more popular amongst consumers. The statistic is that if we were to look at the total vehicles sold in Singapore in the first half of this year, 1 out of 10 vehicles would be an electric vehicle. That is lower. That is lower than in China, which is above 20%, lower than in Europe, but probably higher than the USA. And amongst the top EV makers, BYD will be one of the top 3 EV makers, based on the total number of EVs sold in the first half of this year in Singapore.
All right, thanks. I guess there's no more questions. I think your presentation is quite detailed already. There's no need to ask questions anymore. But it's indeed quite an interesting space that we are in right now. Once again, thank you so much, Gerald, for joining us tonight. Please do check him out on the website, growbeansprout.com. I think it's already been also mentioned in the comment section. And I'm going to join the Telegram group for discussion. You can also go to Beansprout SG. So please do check Gerald's team out. Right. And last announcement is also if you want to find fundamental data and price data for Singapore stocks, including REITs, please do check out sg.equitiestracker.com as well. All right. So Gerald, anything that you want to say before we end the session?
Thank you everyone for joining the session today. Hope it was useful to you in some way. And thanks so much, Benny, for hosting me tonight.
All right. Thank you, everyone, and have a great evening. We'll see you again, Gerald. Hope to see you in the next session.
Thank you.
Good night,
Take care.
everyone.